Let's first start off with the setup from the derivative space as to how we moved into the July series from the June series.
So I think we've come in fairly strongly into the June series. You know, the overall rollover percentages with the expiry last Thursday were higher than the usual numbers. You know, we were almost usually about 85% of the positions get rolled in, but we saw almost 88 to 89% positions which got rolled over into July, and this is despite the fact that almost 34 stocks were going out of the FNO list last month. So I think so that was stocks. Even on the index side, I think the overall percentage was high. The only thing was that, you know, throughout the expiry series, we didn't really see levels expand significantly with respect to the overall roll costs, which said that, you know, while people were carrying over their positions into the next month and continuing, you know, there was a bit of a caution as well. Overall, I think we've got a whole bunch of triggers going into the July series, you know, starting with the first weekend, over the past weekend on the G20 summit. We've got the union budget coming up on Friday. You know, that's going to be followed up by the earnings calendar and obviously progress of the monsoons, which is critical for the month of July. So I think given the kind of overall, you know, factors which are going to be determining the market direction, the setup seems to be strong. Any disappointment on any of the fronts could probably look at some kind of a correction for us. For now, you know, in terms of the overall positioning in the market, you know, we still see 12,000 as the upside case for the market and about 11,700 as a strong region of support as of now.
Also, with regards to the bank Nifty, I mean, the month gone by has not been a bad month of sorts. I mean, it did have its ups and downs, but is it having an equally strong start in terms of rollovers that the Nifty has seen?
Yes. So in fact, overall, you know, the index rollovers, even on the bank Nifty side, were reasonably high compared to what we've historically seen in the last few months. So I think the underlying trend continues to be strong. Although I think in bank Nifty now what we are beginning to see is that there is probably some kind of divergence happening. Earlier, the index levels was really being held by two stocks, HDFC Bank and Kotak. And I think now we are beginning to see that spread more widespread with, you know, the participation of other bank Nifty constituents like ICICI, Axis Bank and SBI also playing a pivotal part in, you know, the performance of bank Nifty. So, you know, the underlying trend at an index level on the banking index continues to be strong, and, you know, we'll probably just see some kind of a divergence there in terms of the participants pulling up the index.
And also the fact that this time around for Nifty Bank rollovers, I mean, participants were ready to pay a slightly more higher rollover cost as well. That should be a positive indicator, right?
Absolutely.
All right. In terms of various other sectors, where did we spot slightly weaker rolls compared to the slightly more pronounced rollover numbers, the stronger rollover numbers?
So I think some of the names where we did see a bit of pressure were in, you know, in the larger PSU space, you know, not really the PSU banks, but, you know, the likes of ONGC, NTPC, you know, Power Grid, and, you know, the public sector enterprise kind of a space. That saw a bit of a lower rollover. I think IT was the other sector which kind of saw rollovers under pressure for most part of the series, and I think in terms of the absolute rollover costs as well as in terms of the absolute rollover numbers, IT was a sector which saw a bit of a muted, you know, action. I think Reliance, in terms of headline numbers, saw slightly lower rollovers than usual, but I think that's probably more to do with the fact that there's been some kind of uncertainty around the dividend and when that's kind of going X. But broadly speaking, you know, metals, pharma, all these stocks, you know, consumer for that matter, saw fairly decent rollovers. And frankly, when you see like an 88-89% market-wide positions being rolled, there's really limited scope for some of the sectors to be massively lagging behind. It's just a question of shifting plus 2% to 1 and minus 5% from averages. There's not like a drastic deviation.
And you highlighted to private banks. I think from the banking space, did you see rollover leadership coming in from the private banks in particular?
So we saw HDFC Bank, ICICI, Axis as well, which rolled in fairly well. Yes Bank not as much. There was pressure in Yes Bank on the short side in terms of rolls. The cost kind of kept on coming lower, and I think for some reason Kotak Bank also, the rollovers over there did not really enthuse a lot of a lot of confidence. So on the private banks, what we saw in terms of weakness, in terms purely from a rollover data, was Kotak Bank and Yes Bank, but the others were fairly strong. And I'll probably add SBI to that as well. Despite worries around the QIP and the fact that there's probably a potential dilution coming in, the SBI rollovers also happened reasonably well.
The other one I want to talk about is obviously Indiabulls Housing Finance. While it's been, a fairly, up and down ride for the counter, decent enough rollovers and of 87%, I believe, and it was a positive rollover cost as well, one of the highest rollover costs that we've seen taken forward.
So I think that's been the case with Indiabulls Housing Finance for a while now. Interestingly, I think the position, despite the sharp, the sharp moves and volatility in the name over the last, almost over 6-8 months now, since September, I think this is not a name which has, lightened up significantly in terms of positions. So, it's probably the fact that, positions are very concentrated and, people who hold those positions continue to believe in the story and are willing to kind of, roll over those positions at whatever cost. I think Indiabulls Housing, the data seems to be, a bit divergent with what the price action is, and as a result, I try not to read a lot into the rollover data for names like Indiabulls Housing, where there is so much of divergence between the performance and the rollover data. While it works largely 95-98% of the cases, Indiabulls Housing probably stands in that 2% category where obviously the stock's been all over the place with limited change on how it rolls.
Okay. Anything else, Tushar, from a stock specific point of view that probably one should watch out for come the July series?
So I think like I said, the banks, the private banks which were not really the participating banks up until now, along with SBI, they are clearly one set of names to kind of look at. I think on the long side, the other sector which kind of really the other stock which really stood out for us in terms of rollover was L&T. While there was some kind of a worry around its dividend and all of that, but I think the stock rolled fairly well, and positions kind of got rolled in easy. Reliance was one name which seems to be suggesting some kind of pressure. I know the stock's up today and it's rebounded well from that about 1250 odd levels, but purely from a data build-up point of view and a data centric, from a rollover kind of point of view, it seems to be suggesting that that's kind of tiring out in terms of its price action, and in case of any weakness per se in the markets for the coming series of July, Reliance could probably lead the markets on the downside.
Tushar, one question from my end. We're speaking to chartists who look at long-term charts, and there was somebody who spoke about how the PSU space is back at levels from where it started a rally almost 20 years ago. Now, it's too long a chart to look at, but when we look at what some of the PSU names have done in the recent past, it does seem that there is some buying that is coming in. Banks have been center stage, but some of the others too have seen that uptick, save for today. Anything that you are noticing which is peculiar in the derivatives side for any of the large PSU names as well?
So like I said, some of these other names, that the large PSU names like NTPC, ONGC, Power Grid, etc. From a derivative standpoint, we saw a very muted rollover action in these names. And, again, they are, I won't say that these stocks are where they were 20 years ago, but, obviously they have lagged in terms of performance for the broader markets over a fairly significant amount of time. So I think, it seems to me, so obviously today these stocks are down because of, this news about the potential disinvestment on the CPSC ETF, and this worry about supply coming in on some of these names. But I think overall public sector banks, people seem to be really tiring out of holding those positions beyond what you need to mandatorily hold to have index weightages. So, from a position point of view, the fact that they didn't get rolled over, the fact that, open interest is beginning to come in lower on the space per se, the fact that they have underperformed the broader markets, I think people are beginning to tire out of holding these positions, and that's where you're beginning to see some easing out over there.
One last question, Tushar, and we couldn't have had this conversation today without talking about what's happening to autos. In today's session, there's a bit of a dichotomy. Two-wheeler companies have done well, Maruti quite hasn't, but it's been it almost seems that when you look at the screen, it tells you that the stocks have stopped reacting to bad news. And that to a lot of people is sign of a bit of a bottom. Are you reading into that any differently?
No, not really. So I don't think that you will, trade into this sector to make a quick 10% from these current levels or 10-15% from these current levels. But I think purely from an action point of view, the stocks seem to be beginning to start trading at the bottom. I think a lot of the negative news has kind of begun to get priced in. The impending threats about electric vehicles and all of that. I think markets saying that, they are still a few years away. But in terms of, just selling out, let's say, Maruti beyond 63, 6400, 6500 really is a base, but I'm saying 6300, 6400. I don't see too many people who see value in the fact that, you would want to kind of sell out Maruti there and then look for a larger move down. I would tend to think that, a lot of the auto stocks, irrespective of the fact that two-wheelers have reacted well to the numbers, are probably are getting into a zone of consolidation where the last leg of, sellers would probably just sell out and long-term investors would start collecting the stocks around here. So I think the risk reward over a longish term period is skewed to the upside. Having said that, it does not mean that, Maruti is going to 7,000 within this series or, the next series, or Hero Motors is going back to 3,000 or 3,200. I think the change of trend is still some time away.
Tushar, so good having you. Thanks much for taking the time out and speaking to us. It's lovely listening to you at the start of the series for how the series could shape up.
Thank you.